Hello, Dan. It's Trevor.
Hello, Trevor. Can you hear me?
I can hear you fine. Can you hear me?
I can indeed, and I can see you. 1 second. Let me just make you the presenter. Okay. Okay, you should now have the power to show your screen.
Yeah. Okay. There we
There's
are.
we're looking at Amazon.
Okay, that's not where we start, as you know. So let's go to Europe, and then we'll
Okay.
be ready when you want to hand over.
We've got about a minute to go, I suppose. Oh, actually,
Okay.
it's just turned 9 o'clock, so actually, I suppose we can start. We'll get started if you're ready.
Yeah. Okay. Well,
Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll try to get through everything in about 30 minutes. If you have any questions for Trevor, don't forget, I'm sure you all know how to do this by now, but there's a questions tab in your little go-to webinar window and you can just ask questions in there and I'll pass those on to him. The handout for today's webinar can be downloaded from the handouts tab. You should be able to see that as well. It should just be below questions. Please let me know if you can't download it and I'll send you a link. We've also got another handout in there that's our CFD guide, which explains the different instruments that we offer and the technical specifications for them. Trevor uses basically various indicators when he's talking, so the handout will be very useful for you. For those of you who don't know Trevor, I'm sure you all do though, I'll just give you a brief intro. Trevor has over 40 years experience as a technical analyst and trader. He's worked for large companies such as Merrill Lynch and Bloomberg, and he was also a former fund manager, or maybe even a current fund manager if I'm not mistaken. So your kind has been in the news a lot this week, has it not, Trevor?
Absolutely. Not too much hate, I hope.
Absolutely. Well, over to you, Trevor.
Okay. Yes, indeed. So I've twice run two large hedge funds in my career. Now I run a smaller one, but not particularly a short selling one. Not, in fact, we don't. We only short sell as traders. So it's a trading fund. Okay, let's. So today we're going to cover. Of course, we're going to start with the currencies. Then we're going to move on to the indices and commodities, and some individual stocks. As well, but there's a lot to go on to. But it's a week where actually the market was dominated not by the dollar or the stock market or anything like that, but really one share and the implications for that. So GameStop dominated last week's market narrative, but I just broadly say there's very little sign that this volatility linked to this exuberance of retail tradings heralds a market-wide contagion. So it's not a threat to the market itself, but it's historically very important. And if we got time, and if you're interested, and anybody asks me to, I'm pleased to share my opinion about it. I think it's fascinating, in fact. But let's get through the market, starting with the euro. So this is a weekly chart of the euro. So every bar is a week here. I want to start with this one because basically this easing back of the euro was very much on the cards, and we saw this, really much too early, in fact. With the divergence came following this break to new highs at the start of the year. We got the bearish divergences in the RSI and the MACD on the weekly chart. It also occurred at the 50% Fibonacci I'll call it the target, but the resistance level from the measurement of this move here, from the beginning here in March 2020 up to the high here in the third quarter, back to the low again, and then measuring up from there, A, B, C, and then D, and we got to the 50% level. Now it's stalling at the 50% level. Now going into the shorter term chart, so here we've got what we did also see was the bearish divergence. So divergences did a good job of giving us warnings as we made high. These last four here, very clear loss of momentum, particularly from this point onwards here. Previously we had high upside momentum in it, but we lost momentum. That in itself wasn't a sell signal. We had a wedge. You remember, I've taken it off now because it's fulfilled its objective, but we had these 3 highs here and then this series of lows here into that narrowing triangle wedge-shaped pattern. We broke down at this point, but we met the minimum price objective, so that's why I've taken it off there now. So now what are we faced with? We've retraced actually 38.2% of the advance from the lows here at the end of last year to here back to 38.2. That in itself is support. Also, the support at 119.50 as well. Here, this is massive support. I'm going to give it one of my cigar shapes, which is, as you know, my shorthand for big area of support. So I'm putting that in there now, and that's like a big mattress for the market should it decide to fall further. But at the moment, we've still got this support here, which may be enough to hold it, and we may not need this support down here. I'm afraid that if it does break this level here, then the move to the big area of support below 120 is going to probably be very quick. So the fall from here to here will be quick because the rise was so quick here, and so there'll be little there was little resistance as we broke to a new high, so there'll be little support on the way down. So this breakout move here could be retraced, but the key thing is to watch the behavior at the 120.50 level there. So it's going to be a long week, but already we're forming a descending triangle, which is a potentially bearish pattern in the market, not a reliably bearish pattern. We have got the bearish divergence, so you know there's a good chance that it could break down here, and then if so, then I think it'll come to rest down here. But let's watch. It hasn't done it yet, and let's not say in any way it has to do it. We get a better picture from the sterling though, but sterling 2, what's gone on here? Excuse me, sterling 2 is forming a wedge. Now maybe we're just at the earlier stage of what we've seen in the euro. So here we had a strong move up, nicely rising highs in the RSI here, but now lower highs here. So bearish divergence, we're losing power this year in the market. I'm just going to the weekly chart to show you the context of this. The MACD here is clearly up, strong. RSI not really diverging here. Massive support, which I've talked about so many times before, here at 133 is a significant level. We're well above that now, but what I'm saying is that here we're forming this tiring end move type of chart pattern here. We know where the breakdown point is for it. It's here, and so watch that. Currently that's a 133.60. We will measure the height across the pattern here. That will 1, 2, 3, 4, 5, and that would take us down to around here, back to the levels of December last year, and also on top of the support, the resistance, which became support of the September high. So there's a chance here that the good strong chance, I should say, here that we're in for a correction, and I do think it's a correction in sterling. Let's look at the sterling versus the euro here. So GBP here, and so this going up means the pound outperforming the euro. Always good to refresh our memory of the weekly chart. This is so significant, isn't it? Here, massive ascending triangle, these higher lows here, horizontal highs here. The break point was, let's call it 113. It was a little bit lower than 113. We broke it. I think this is a good break, and we're on our way up now. The technicals below here, the RSI is going up and getting stronger. The MACD is also going up, positive and widening. So here we are clearing these resistance points here, and this is looking good. So this is the trade really in the sort of mixture of behavior against this slightly strengthening dollar. So euro sterling versus the euro. So I think this is set to go further up, and we haven't got any significant divergence quite yet on it. It's not pushing ahead too strongly like it was here, but it's looking good. It's a breakout. I think this has got further to go. Swiss franc. This has been the great trade if you didn't like the US dollar. So I'm going to look at the weekly chart. I know I always remind you of this, but it's just important to get the big picture of this long-term downward trend in the US dollar, which is a rise in the Swiss franc. We had that major break at 90 cents here. We've come down, we've formed, which I think is a reverse head and shoulders. We'll see on the daily chart. We were warned, however, by the bullish divergence here, low, lower, low, low, higher, low. Not the same as here, low, low, lower, low, low, lower, low. So we had this indication that this was going to give way. It did. But this one here, because of the higher low, loss of momentum on this move, it was always looking like it was ready to pause. We've got lots of downtrends that we could draw in there. The long-term trend is down for the dollar versus, particularly against the Swiss. Now, when we look at this, I think that we are looking at a reverse head and shoulders. So this is the left shoulder here. This is the head. This is the right shoulder. This could be a textbook one actually here. So here we've got the neckline. We measure from the head to the neckline. That takes us right up to 91, right into the heart of, I'm going to give this one a cigar, the major consolidation that dominated all the trading at the end from the second half of last year, trading above the 90 cent line. So this is a retest of that, maybe picking up this downward downtrend line here. But we do look as though we can move quite smartly and relatively easily to 90 cents at least, and then resistance intensifies from there. So I think it's up for the US dollar Swiss franc now, and this is an intermediate bottom in place in the long-term downtrend. I want New Zealand dollar, Japanese yen. The New Zealand dollar has been the great trade, the great currency to trade if you didn't like the dollar, but now things are changing for this. So here we've got quite a strong warning pattern here of a change. Let me show you here. This is the weekly chart, and I want to show you the long-term chart just to remind you of the importance of this here. Let's get that out of the way. We punched into these very significant tops there. I don't need 20 years. Let's get 10 years is enough. This series of tops here, we've punched into that, having had that big reverse head and shoulders bottom in there. But this is significant resistance. Of course, if we can clear it, then that opens the way up for much stronger move. But we are at a predictable level for this move to stall. So here it is stalling, and the short-term pattern, the daily chart again, pattern of is a descending triangle. We've only got 2 points on the bottom here. I'd like more, but we have got lower highs here. And I like my shorthand, as you know, for badly drawn lines, which are just indicating that there is a trend there, but not to use for trading, is to make them dashed. So I'm making those dashed there. So we've got a bearish divergence in play. We've got a decline in the RSI in play. We're inside this triangle, we're right in the middle of it. This is the threat point. We know where it is here. So watch that in case this starts to do what the Mexican peso and the South African rand have done. I'm not going to show them today. We talked about this in every session up till now. I told you those two, which were the best ways to participate in the dollar weakness. The game was over at the end of last year for them. They came to significant areas of support, big cigars there, multi-year in the case of cigars. So further progress was extremely difficult, and both of them were the strongest currencies last week. because sorry, the dollar versus them was strongest last week because they're bouncing hard from, again, predictable levels. But so in their smaller way, many other currencies are making the same formation of a pause in the long downward move in the US dollar. So for the moment, so far this year, that dollar weakness has really stalled. So I just show you the Australian dollars as a way of showing you the impact of that, because that was the commodity currencies was another one where a lot of Canadian dollar and the Australian dollar, where people wanted to participate against the US dollar. And that's the move we've had. And the weekly there, after that significant break, we had a little pause here. We're on our way up, but here's the big cigar, which has somehow managed to move itself. And we must widen it out a bit. A little bit of that later, but that area here, 75 to 80, and we're right in the middle of it now, and we're stalling. No surprise to us technical analysts, are they? Is it? Well, how is it stalling? Stalling again in the descending triangle here. So here we have got one, you could say 2, 3, 4 bottoms here. So I like this line, so I leave it solid. 4 tops across here in the decline for it. We're hesitating at the break point, I've got to say that. This is a real classic in sort of studying where is the break point. We had a Takuri move through it here, but we finished well above it. Here we finished not really through it. This was only just through it, but it wasn't the behavior we want. Now today we're in formation. We'll have to see how the day finishes, but if we have a big black candle here, then we have broken. We measure the height of the pattern, 1, 2, 3.5, 1, 2, 3.5. That takes us down close to the very significant support level of approximately 74 cents there. So watch for that. Corrections potentially of descending triangles. It's a common shape across the currencies there. Going to Bitcoin now. Put it with the currencies. Many of my institutional friends say you shouldn't do that, it's not a currency. Well, maybe it's a commodity near a gold. So here we've got, I think, there's lots of argument about this, but I think it's a symmetrical triangle. Got a dashed line in here because it's not a well-drawn line. They don't line up properly, but we have got a low, a higher low, and a higher low. Here we've got a better line with this outlier spike here, which I'm forgiving. And there it is. Now, as in symmetrical triangles, as opposed to descending triangles, descending triangles normally, not always, but normally break to the downside, ascending triangles to the upside because of the vulnerability caused by the horizontal line. But here, the bears are as strong as the bulls, more or less, the angles here. So we're not really sure, as they do battle with each other inside the triangle, which way they're going to break out. But now we seem to be testing the top end of it here. We've got downtrend line here, and it's, I am not going to say it must break up or anything like that. I think because of the longer term trend, which is up in it and it's still intact, that this is going to end up being a pause, and we will make another significant leg higher. But I'm a patient trader, and I know that things can evaporate, and particularly this sort of thing, and so I'm going to wait for the breakout. I don't mind that it might be an expensive day because the breakout may be powerful, because the reward, if I get it right and we are on another leg up, it will be substantial. And so buying them a bit late and higher up is a small price to pay for the added confidence of being on the right side of the market. So I'm sure by next week we will know what the outcome of that is. Right, now moving to commodities. Now we've got in the precious metals, we've got a boring one, and we've got a fantastically interesting one. The boring one is gold. Gold continues its narrow range, which is inside a broader range. So the range short-term resistance is 188.80. I said exactly that last week. Support at 1,810, and this narrow range is inside a wider range here. So we're inside the range. The RSI is at 56, it's right in the middle here, and the weekly MACD is close to 0. And that's when triple smooth moving averages get to 0, it's because the market is going sideways. So there we're stuck in a range. But something else is going on here, and we were ready for this, weren't we, guys? Because we were watching this, the gold-silver ratio. And I've shown you this lots of times before. We've seen this is gold divided by silver. So going down, as we are doing now, is silver outperforming gold. It rallied in September here. So silver, gold was better performer than silver, but it resumed its longer term trend off to the left here, the longer term trend of silver outperforming gold, tested this very important low from last year, and we've broken it, and this is today. So this is, you know, the break we've been watching for. It really broke it on Friday, but there's no doubt about it today. Silver outperforming gold, substantially so. Now, when you look at the chart, you can see it here. Here's a different chart completely. Okay, so let's look at the weekly chart for it first of all. So what's going on here? This is fantastic, isn't it? We pulled back here to 38.2, and now we're retesting the previous high. We've got a big cigar over here. That's true, but we look as though we're ready to punch into it. The weekly MACD is crossed. The RSI is looking fabulous. We're on our way. But we already noticed this because we were testing. I mentioned before we were testing this previous high here and this resistance here. Well, now today, Monday, it's gapped up and we've got this long bar pushing through, and you know, I think it wants to go through this high here and then onwards and upwards. It's a big breakout. We're going to give ourselves a big cigar here. That's that one there, and this is the big support area now below us here. So this is a big break here. Now I know that the Reddit people and lay claim to this, but this is a different animal from a small stock like GameStop. This has got supply and demand. This is actually used and held and stored, and there's a massive supply in the world. You can't corner silver except perhaps in the futures contract the way that you can with a small stock like that. But it's powered ahead. It looks as though it's going to break to new highs today, and it'll be onwards and upwards. So this is a big one. But we were warned through this chart here. Oh, okay. Now going to crude oil.
Trevor.
Yes.
Trevor, can I stop you for a second? We've got a couple
sure.
of questions actually from the same person, Gregory Amos. Thank you very much for your question. He asks, can you talk about the yen from a global perspective? It seems to be weak. I first noticed it with the dollar, but it seems to be losing ground against all currencies as well. And the second question he asks is, I know you analyze trends on the weekly chart. Is there any value to using monthly and shorter term? For example, do you trade in 1 or 4 hour at all?
All right. The answer to that is, let's answer the second question first. The second question is about the time frames. I use weekly and daily charts in this talk. The reason is that you know, I talk to you once a week, and so I've got 5 data points between each of our conversations, and so I can draw some meaning from that. If I chose 4 hour charts, for example, I would say that you could go bullish and bearish within a week using that kind of chart. Certainly with hourly charts, you could go bullish and bearish a couple of times in the week from that point. But I think with the daily chart, we've got the right horizon for our weekly visits. So the charts I show are relevant for this week to next week. The weekly chart gives me the context of it. And so, you know, I do actually sometimes go to long periods of time, like 5 years or 10 years or even 20 years in the case of the Nikkei, to show us what were we doing the last time we were here. So when we look left, what happened? and that's very important to do that. We have to bring it in here. So that might require a monthly chart, but I just tend to use the weekly chart to bring in lots of data in, and it doesn't matter that it's squashed up. I'm not using it for my trading. I don't need all the detail and fidelity in it. So monthly would also be good, but I get the same message from looking at lots of weeks in the weekly chart. So I just stick with that. I only have up here daily and weekly, and then have a plain one here for doing other presentations. And so that hopefully answers that question. That's just the way I do it. I don't say you have to do it, and I don't always do it like this, because these charts are for this talk. And so I'm talking a horizon where I'm not going to talk to you till next week. I don't want to say, sell today and buy back tomorrow. That's inappropriate if I'm going to talk to you next week. So I'm trying to get the talk in context for our conversation. If I was a shorter term trader, of course, I would have to look at a shorter term chart. If I was a day trader, a much shorter term chart. But this is how how it has to be if we're going to have this sort of weekly conversation. So now looking at the yen itself, here we've had this long move down in the dollar and a change here following a weekly divergence. So there was a long warning in that, this is, and it came where? Here. This deserves a cigar, I think, here. There, that big support area here. Predictably, if this move was going to end, it was going to end there. It was a very significant break. I talked about it a lot on these calls when we broke those dollar lows there. So what is it? What is going on now? Well, we've got various different ways of drawing downtrend lines. This one I think is the best one I can do. We broke that last week. We talked about that last week. I don't know why I've drawn that. There. So we've now got, well, low, low, lower low, lower low, lower low, lower low, higher low. Oh, that's why I drew that. So what have we got? Left shoulder, head, right shoulder. Sorry, I drew that in last week, didn't I? And so we drew it across here. Now, this is, see, last week we were down here, just breaking this downtrend line. Now we're approaching the neckline of the reverse head and shoulders. So you could draw it here, you could draw it across this point here. It makes a lot of difference up this end here, but I think we are breaking it now, and so this dollar advance will continue. So in linked to all the other things, and then we should be going 1, 2, 3, 4 and a half, 1, 2, 3, 4 and a half up to this area here. Oh, I shouldn't have moved that. There. So let me just put it back to where it was. Up to here, this area here, on the basis of the reverse head and shoulders. So we've got a pretty tall one, means a lot of volatility in the change age, both from bearish to bullish, should infer a decent move to the upside in the US dollar. That's my view of it. Still a long-term correction, however, and into, we of course know, a massive amount of resistance. So it can stall, and it probably will stall later. But we, as always, we wait. I can't. This is like playing a game of chess, isn't it? You can only see a few moves ahead. You haven't got just one player. You've got hundreds of thousands of other players against you. They can all do different moves there. So we don't know what's going to happen. We can just imagine what might happen and then plan for that. But we have to wait and see. Right, I know I'm running out of time. Thank you for that good question there. Sorry for my annoying screen, which is...
Actually, Trevor, we've got another quick question that we might be able to answer from Hugh in Australia. Thanks for your question. He asks, do you incorporate Elliott wave with your analysis?
No, I do not.
That's a short answer.
That's not to say that it's bad and it's wrong or anything like that. I don't think that, by the way, at all. I know some good people who do it, and I admire them. but I can't do it. I'm not very good at it. I've got some fundamental issues with the Elliott wave in that it's always got two views, bullish and bearish. That's why it's always right. And I mean, that's a fact of it as well. It's bullish. This is wave 3, unless we go to so-and-so, in which case it's a continuation of wave 2. Now that's, and by that time, we've gone down a lot already. I'm a trader. I can't operate with that. Secondly, I don't buy into the first principle of it, that the world and sociology is sort of not determinative, and we are unable to resist this 5-wave pattern with an ABC correction, which drives us, and we're just helpless creatures. I don't believe that either. So I don't do it, and I will put it down to the fact that I'm no good at it, if you like, for the reason for that. But also I'm a practical trader, and I must do what I feel I'm good at, and you know, I don't want to make my life difficult. I want to make my life easy. So I'm not dissing it at all, because I do know some really good people at it, but I'm not one. Okay, so here we've got the US 500 here. Yeah, fantastic bull market. MACD is still positive on the weekly here of it, but we had a significant down week last week. So here it is here, down, and we look as though we're headed back to test the resistance, which is now support at 3,590 area here, but back in here, because this is not strong support here, so we can go down. Those of you that are regulars to this call, we've been talking about this bearish divergence. We've had other ones before, but look how this held up well here, so as we made new highs in here. Then we had this bearish divergence. This time last week, I was saying we are making new highs, but you know, we've seen them before, but here's one, and one day we'll say, we knew, because there was a bearish divergence there. But here it is, and it does look as though we're breaking down from it. It was a wedge formation also. We'd lost momentum here. So how far is it going to come down? It can easily come down to here or even lower, and not at all damage a long-term bullish pattern in here. So there's lots of areas of support, but it's having its overdue correction. The FTSE is being battered, and you know, it's suffering with mining and bank and well, particularly the mining sector, and it's come down to a major area of support. 6650 was an important level. It's being pressed, but the support intensifies below here, and just remind ourselves of the weekly chart here. So we're pushing into this area below that below that high there. The support intensifies, but it's you know, it does look short-term weak. Long-term, it still looks healthy, and so I do see this, I must say, as a correction in the bull run, and therefore for me, with my type of trading, it's a potential opportunity when it starts to stabilize. So that's what I'll be looking at it. So the RSI has come down weak here, while the MACD on the weekly is still positive, and that when the volume starts to decline, and things will set me up as a potential opportunity on the long side to resume on the long side. Very quickly, if I've got time, I want to talk about the German DE30 here. Look at the weekly of it. It's fallen hard, but it meets very strong support from the second half of the year consolidation, last year consolidation here. And I really, again, this is one I think that it's going to find its footing soon and present an opportunity. So this area of support here, it's what I call second half of last year support. We're at it now, and so I'm looking for behaviorally for it to show signs of stability. So I see that the RSI is starting to come up again now, and I have my triggers for entry in the direction of the longer term trend. So I think this is set itself up for an opportunity. I haven't got time to go through the Nikkei. The Nikkei as pausing at its 100% Fibonacci price objective. We've looked at that extensively over the last few weeks. It may go back a bit further, maybe to 26,750, but it made a major break to the upside. This is a very bullish index, the most bullish major index in the world. And so any pullbacks like this are setups for opportunities. I can't say it more better than that. So I missed out crude oil, didn't I? And so in case, let me just talk about crude oil very quickly. We've got a similar pattern here to other markets. So this measurement here is A, B, C, C, D is here. This is 61.8. Here's the big cigar of resistance in here. We've come up to it. It's stalling at a predictable place. The MACD is very positive on the weekly. The RSI I still think is very good. Of course, it is at a high level. So here's the consolidation here. I haven't drawn any lines on it yet. Could be a wedge, could be a flag pattern. I hope it's a flag pattern. But we had a bearish divergence in both the weekly and the daily to warn us of that. We did talk about that previously. I expect support to come in at 54.48, and if we need it, 52.50 here. That's there, but here we're at support now, and it has bounced so far today at that point. Don't forget, the long-term trend is up in here, and we've got unfulfilled objectives. I think it's having a natural pause in its journey higher. So once this intermediate term correction is over, I think we'll leg higher once again. I think it's setting up for doing that. Okay, I'm going to put the Amazon chart on here because this is the one that we've been following as a bellwether. We've got this symmetrical triangle here, and we've got these lower highs in place here and the higher lows here. Now, we've talked about this triangle when we were testing the lower end of it, and then we've also talked about the triangle which didn't change when we tested the upper end of it. And for me, I teach technical analysis to institutional traders, and for this is going to go into my album of examples of two things. Firstly, the classical charting, and the market is oscillated inside this triangle, and normally the breakout of a triangle, and when I say normally, this is usually quite reliable, is between half and 3/4 of the way along the triangle, and this has gone beyond it. So when this happens, so when, you know, if you say, if I drew this to its apex, which would be somewhere on the right here, this is about halfway along, and we're now at 3/4 of the way along the triangle. And usually the breakout is in this area here. Well, we haven't broken out, and we're approaching into the last quarter. You often, very often, when you go into the last quarter, it's not a triangle. It's just we continue sideways. So I think increasingly, my view is changing about this, in that we're going to have a big burst up or down as it breaks out of the triangle, to we're going to continue on sideways, and it'll just float outside of the triangle. That's increasingly likely now. The second lesson from this was the nature of this test of the line. I think we had as good a line as possible that we could draw here. These were lining up perfectly, these points here. So we weren't, let's say we were surer than normal about the accuracy of our line drawing. But going through each of these days here, 1, 2, 3, 4 days, why were they not breakouts? And so as a trader, of course, it's very important to get this right as soon as possible. But here's an example of, we had 1, 2, 3, 4, 5 tests, and you could say 6 tests, including Friday's high as well of the line, and yet it failed. But why in every single case was it not a breakout? And you shouldn't have been caught long of Amazon as a result of it. Okay. All right. Thank you very much. Do we have any questions, Dan?
We do have one. If you can, we do have one, Trevor. If you can just squeeze it in.
I'm fine about it as long as everybody else is.
Yeah. Well, a request from Andrew in Kenya has asked: is it possible to look at the Ethereum coin? Ethereum, because
yes, indeed.
Thank you for your question, Andrew.
Did you say Andrew from Kenya? Yeah.
Yes.
Yeah. Okay. So I'm going to draw this in. this is a, I'm going to make this dashed, you know, that is my shorthand for it's not a proper line that I can use in my trading. It's just marking the higher lows pattern. Then highs here, we've got a similar thing here. We've got 3 higher highs here. It's probably a little bit better line, this one, but so we've got the 3 higher highs here. So we're in, what is it? It's a wedge pattern. We've got the wedge with the descending triangle, the bearish divergence. It's not a descending triangle, sorry, forgive me. There, it's a wedge. We've got the loss of momentum here, and so this is a big picture of the end of, let's say, this leg of the move. Here's the power, higher highs in the RSI here. Then from this high here onwards, we lost power, and that's the situation now. These are often reversal patterns. I'm only talking classically about charting. So but these are most often resolved to the downside, and it's a wide pattern, goes all the way from here to here. And so that would take us right down to here, which would also be a logical place. 800's a round number, 750, the sort of support comes in, because there's no support in this area here from 900 to 800, because we gapped up here. So nobody sold short in there because it gapped higher, and so there's no covers there. So this is vulnerable, and we're testing the lower line. The lower line is difficult to draw correctly. This may form another pattern, could be a head and shoulders pattern, and it has definitely lost momentum. So this is one that, from my point of view, is vulnerable, is very vulnerable to a pullback. Probably not what you wanted to hear, Andrew.
Thanks very much, Trevor. Thank you, Andrew, for your question again. Is that it then for today, Trevor? Are we finished?
It is indeed. Thank you very much indeed, everybody.
Thank you very much, Trevor. Yes, thank you, Trevor. I just wanted to warn everybody that next week there will not be a webinar. We'll be coming back on the 15th of February. Same time, same place, but on the 15th of February. So thank you very much, everybody, for attending, and I hope that you enjoyed our webinar. Thank you to you, of course, Trevor. Do you have anything else to add?
No, I shall miss you next week, and 2 weeks seems like a long time. I hope you'll join us in 2 weeks' time. But and I'm sure the picture will be very different. We'll be out of some of those triangles and those wedges by then, and Amazon must do something as it goes through that symmetrical triangle. But thanks very much, Dan. Thanks, everybody. May the trend be with you, and be careful out there.
Thanks, Trevor. Bye, everyone.
Okay, bye-bye, Dan.
Bye-bye.